Carnival Cruise Lines has been one of those stocks that's blown up all over YouTube, primarily because they had a really good growth projection, but they also had a pretty luscious dividend. But as you know, in March, the pandemic came along and things changed. Since then, Carnival Cruise has not been looking too great. In today's video, we're gonna look at, should we start thinking about getting back into it? Or is it still too early? Or should we just avoid it outright? If you're unfamiliar with Carnival Cruise Lines, it's the world's biggest cruise line. They operate 9 different brands within it, and roughly 2/3 of their clients are repeat customers every year. So if you were ever to go on a Carnival cruise, it's very likely that the majority of the people around you have been on numerous cruises with Carnival before. Their stock price was above $50 per share, but take a look at the stock price chart here. We've basically been treading water kind of around 15-ish bucks per share in the last few months. They currently have about 100 ships operating around the world, though they've announced recently in their third quarter report that they're thinking about offloading some of those, most of which were like the least profitable in their brand. And if they're able to do that, they can shore up their cash positions, but they can also lower expenses and also raise profitability on the remaining ships. I'll get into that more here in a minute, but Carnival Cruise generally serves about 250,000 clients per year, passengers per year. And typically the way it works is you'll pay for your ticket up front, often months or even years in advance. But then when you're on the ship, there's all different kinds of services that you can get. There's like, clothing and different kinds of goods, stores. There's also upgrades in food and alcohol and drinks. A lot of ships have gambling and all different kinds of upgrades you can get. So generally speaking, it's safe to say that the average spend per customer is much bigger than just the ticket price. That being said, as of late, Carnival isn't bringing in the most dollar per customer out of all of their competitors, but they're pretty high up there. They just dropped their 2020 third quarter earnings report with a bunch of different figures I wanted to take a look at that can kind of help us understand maybe where they're going to be going in the future here. But first, I wanted to take a second to look a little bit more at that ship sale that I mentioned a minute ago. They're looking at releasing 18 of their 100 ships, which makes up about 12% of their annual capacity. But even though these ships make up 12% of their annual capacity, it only makes up about 3% of their bottom line earnings. So releasing these ships and starting to focus more on their newer, more modern, more efficient ships can also raise margins, raise profitability, which is probably a good idea to be doing. I super don't know who is out ship hunting for old ships right now, but if they can sell them or sell them for parts, that can also shore up their large and getting larger cash position that they have going right now. I'll get more into that in a second. Some of the big numbers that they shared on their report include a GAAP net loss of $2.9 billion for the most recent quarter. Inside this $2.9 billion loss, there's also $0.9 billion of non-cash impairment charges. And that's usually just made up of like amortization or depreciation. So basically, if you're buying big equipment, like a building or a ship or even cars, let's say you buy a car for $20,000, each year it loses value. So you can write off some of that loss each year in your accounting. So they took $900 million hit on things like that in the last quarter. They also mentioned the third quarter adjusted net loss of $1.7 billion. So these are not numbers we're used to seeing on this channel. Typically, recently, we're looking at stocks that are growing really crazy with tremendous PE ratios and that are really capitalizing on the whole pandemic going on around the world right now. But with Carnival Cruise, we're obviously looking at the very opposite situation. Very few people are going on cruises right now. But on September 6th, in Italy, with one of their brands called Costa, they did set sail, and it was a successful cruise, and nothing broke out, and things are going well, apparently. The ship that they sailed on was called Costa Deliziosa, which according to my extensive Italian studies means delicious coast. They also mentioned that they're gearing up with their Ida brand in Germany to start setting sail sometime soon as well. It sounds like the US has the strictest do not sail laws, so probably the US will be the latest to start sailing again, but looks like things are kind of starting to get going again in Europe. And it sounds like also not just in Carnival, but in general in the whole market, there's going to be more offerings going into the future in Asia and the Pacific region as well, which is kind of something exciting to look forward to. Earlier I mentioned shoring up their cash position by selling some ships. They also mentioned recently that they released a stock offering of $1 billion, which basically says we are going to magically create $1 billion worth of stocks and sell them to people who want to buy them. Now they have $1 billion extra cash in their safe, which is nice on one hand because they don't go out of business, but sucks for current shareholders because the amount of the company that you're holding now has become smaller. They call this dilution. After they announced that, the stock price took a dump again. But one of the neat things now that they mentioned in their report is that they're now up to $8.3 billion in cash and cash equivalents, which is up from the previous quarter of $7.6 billion. And generally speaking, these cash and cash equivalents are cash from stock offerings and stuff like that, but there's also long-term debt, which basically says like bonds, like, hey, lend us a bunch of money and we'll pay you back with interest going over the coming years. There's a popular phrase you may have heard before that says, if you owe the bank $100, that's your problem. If you owe the bank $100 million, that's the bank's problem. And one of the neat things about being in Carnival's position, typically we look at companies and it's like more debt is more bad, is less safe, so stay away from them. But one of the neat things about their position is that they can say, hey guys, we're the biggest one in the world. Not a lot of people who can buy 100 cruise ships from us if we go under. And if you guys want your money back, it's probably a good idea if you give us more money so that we can stay afloat for the coming months or years until things keep going. And so they've made different agreements with a lot of their lenders who've gone ahead and said like, yeah, okay, you don't need to worry about paying us back for a couple more years until things keep going again. A couple more figures from the third quarter report. Last year's third quarter, they were doing about 6.5 billion in revenues. This year's third quarter, they only did about 700 million in revenues. So that goes to show like almost nothing is happening. I don't even actually know how they still get 700 million in revenues. I guess a lot of it is probably for future cruises. They also shared the expected cash burn rate to decrease. So the cash burn rate is basically, hey, we have all these ships that we have to keep clean, we have to have our staff operating, and we have to be able to keep offering services like booking and maintenance on the ships and things like that. You can't just send the whole staff home forever, especially when it comes to booking and marketing and stuff like that. So their cash burn rate is going down, which means their expenses are going down, which is a really good thing that you like to see in times like this. So it looks like their cash burn rate, which was $770 million per quarter, is going down to $540 million per quarter, which is a good thing to see. Another interesting note that they had in the report was that leisure cruises are typically much more resilient to economic downturns than things like business travel. And they also can't be replaced by things like, Skype or Zoom, conferencing over the internet, like a lot of other meetings or hotel conference room rental type services. You can't really replace them. And I guess when you're targeting very affluent people who have the money to be able to go on cruises, they're also less likely to be in dire financial situations than those who are, less affluent in times like this. So, aside from pandemics going on around the world, generally speaking, cruise lines are more resilient. And that's something they mentioned in the report. I haven't looked at actual facts, but sounds like it makes sense. A couple more figures for you. Their market cap is about 10.5 billion right now, which is interesting because currently they're at about $6 to $8 billion of revenues per year, which makes sense because so many trips were canceled over the last few months. But typically, they're doing kind of like $20 billion in revenues a year, but their market cap is only half of that. So that goes to tell us that they're like very, very on sale right now. And so if you believe things are going to start picking up, which it sounds like from our Italy trip that was successfully completed and Germany trip coming up and stuff like that, if you believe that things are going to start picking up and you're okay not seeing a lot of price action and maybe even some loss in the coming months, I think, it's not necessarily a bad idea to start considering a small position or a safe-ish position in Carnival Cruise or other cruise stocks, so to speak. So if you're thinking about investing in Carnival Cruise or you're already holding it, what are some other risks that we should think about? Like it sounds like, things might start looking up sometime in the future, but just going through a quick list of some things that you should consider if you're thinking about it is, Maybe with winter coming, the pandemic could get worse. People expect it to get worse in the colder months. Another factor is all of the election-related drama that's going on. Generally speaking, it's safe to assume that if the Democrats and Biden take over, the stock market will probably go down and a recovery might not be as rapid as it was in March just recently. Another thing to consider is that HVAC system replacements and sanitation and increased costs associated, like even if cruises do start up en masse coming up here, they're gonna have to be taking a lot more measures to keep things clean and to try and make sure there aren't any breakouts on the ship. And so there will probably be less margin, compared to previous years per cruise, but that I don't expect that to be like a huge expense. It's just something to take into account. And then another thing to consider is that there might be a shift, especially since the big breakout that kind of got, the pandemic on the radar was that cruise ship Diamond Princess that was harbored in Yokohama here in Japan. I think there might be a bit of trauma in people's minds when it comes to thinking about cruise ships, because that was like the big thing in the news that got it going. So there might be kind of a shift to hopping on a plane for a couple of hours and then running to a hotel room where you can be alone for a couple of weeks, rather than cruising with hundreds or thousands of other people you don't know for months and stopping off in different harbors around the world and stuff like that. I don't know. I think it's safe to expect that there could be a bit of a transition to other methods that are a bit more like safe when it comes to respiratory things, But taking a look at the price to sales, it's only 0.52 right now. So it kind of is a signal that they're a little bit underbought, undervalued, and so you're kind of getting a good deal, so to speak. And my personal stance is that if you're willing to hold on for like 6 to 10 quarters with like zero growth and maybe even losses, once things get going again, I'm not depending on a big vaccine to come out and all of a sudden the world is healed. I'm thinking, the pandemic's more gonna be like how we think about influenza going into the future. So just kind of people being a little bit more cautious, maybe more masks becoming more common, people, sanitizing more regularly. I think generally speaking, if you're willing to hold on for kind of 6 to 10 quarters without seeing a lot of growth, we could see stock prices going back up to 40, 50, 60 in the coming years. And so it really depends on your risk tolerance. It really depends on how much money you have to throw around. Personally, for me in my portfolio, I have owned Carnival in the past. I don't own them currently. I think it's not a bad idea to grab a few stocks if you're willing to hold on. I'm not sure yet if I'm going to. It's kind of one of those ones that's like, yeah, it's kind of a gamble. It could work out a long time down the line, but there's probably more interesting things for me to do with my cash right now. It's pretty safe to say that, Carnival Cruise, you're not gonna buy it for 15 bucks today and wake up tomorrow and it's 20 bucks or 30 bucks, But that being said, their cash position is huge. Pretty safe to say that with the forbearance they've gotten from their lenders, with a bunch of cash on hand, they're gonna be okay for a couple more years without a whole lot of cruising happening, So all depends on how much risk you're willing to take. So those are my 2 cents on Carnival Cruise. Looking forward to hearing your thoughts. What are you gonna be doing with it? Are you thinking about buying it? Do you already have a huge position? Are you dollar cost averaging down in it? Looking forward to hearing your thoughts. Thank you guys for sticking around to the end of this video. Looking forward to hearing more from you in the comment section and over on our subreddit as well. Have a great one. I love you guys and talk to you soon.